Alrighty, so at time of recording, the total cryptocurrency market is down about $53 billion on the day, trading at about 2.41 trillion with XRP, XLM, Canton, Metal, and XPR, our primary, at least focal point assets in this community, are all slightly down on the day, except Canton, give or take, by a few percentage points. But I want to break down that environment for you all, talk about that landscape, and then go over the updated dark pools for you all to be mindful of this week as we head into the last month of the second quarter. So, coming over to our fundamental reports, this is primarily focused on crypto as we've already gone over NASDAQ. NASDAQ has remained a bid on the economic backdrop via the United States. So, in terms of risk assets, primarily crypto. Crypto came under significant sell pressure today as the total crypto market shed around $61 billion. That was when I wrote this report. This rising, it was down overall about $68 to $70 billion in market capitalization today, which was driven by a combination of worsening geopolitical tensions in the Middle East and a stronger than expected U.S. economic data backdrop that reinforced concerns around inflation and higher interest rates. The session began with renewed uncertainty around negotiations between the United States and Iran. Reports emerged that Iran had suspended indirect communications with the U.S. following what it described as ceasefire violations and escalating military activity involving Israel and Iranian backed groups in Lebanon. Headlines suggested that Tehran may be preparing to open other fronts in the conflict, immediately raised concerns that diplomatic progress was deteriorating rather than improving. Further adding to market anxiety were reports that President Trump stated the U.S. Navy would continue its blockade at the Strait of Hormuz despite Iran ending negotiations with Washington. The Strait of Hormuz remains one of the most critical energy shipping routes in the world, which is, of course, responsible for transporting a substantial portion of global crude oil supplies. Any threat to its stability usually tends to create fear of supply disruptions, rising energy costs, and broader inflationary pressures across the global economy. As a result, energy markets reacted aggressively to that data. Gasoline futures rebounded sharply from 6 week lows, climbing more than 4% as traders began pricing in the possibility of prolonged instability throughout the region. I believe oil jumped above $94 per barrel today as well. We know that rising energy prices are particularly important because they can feed directly into inflation, increasing transportation, manufacturing, and consumer costs worldwide. At the same time, the US dollar strengthened as investors sought safety amid the geopolitical uncertainty. The dollar index pushed higher intraday as markets began reassessing expectations for Federal Reserve policy. Traditionally, during periods of heightened geopolitical risk, capital flows into perceived safe haven assets such as the US dollar and treasury markets, while speculative assets like crypto often experience outflows. Adding further pressure to risk sentiment was a surprisingly strong batch of US manufacturing data. The ISM manufacturing PMI rose to 54.0, exceeding expectations and marking the strongest expansion in factory activity in 4 years. New orders jumped to 56.8, employment improved, construction spending came in above forecasts, and manufacturing activity broadly accelerated across multiple categories. While stronger U.S. economic growth is generally positive for the economy, crypto markets view today's data through a different lens. Stronger growth combined with still elevated price pressures suggest inflation remains difficult to fully eliminate. Although the ISM prices paid index did ease slightly from April levels, it remained extremely elevated at an 82.1, indicating that inflationary pressures are still deeply embedded within the manufacturing sector. This combination of stronger growth and persistent inflation is problematic for risk assets like crypto, because it reduces the likelihood that the Federal Reserve will be able to cut interest rates anytime soon. In fact, some market participants and economists are now beginning to consider the possibility that rates could remain elevated for much longer than previously expected, with some even discussing the risk of additional tightening should inflationary pressures reaccelerate. For crypto markets, this creates a double headwind. First, geopolitical tensions increase uncertainty and encourage investors to reduce exposure to speculative assets. Second, stronger economic data and inflation concerns support higher treasury yields and a stronger US dollar, both of which tend to drain liquidity away from risk assets such as cryptocurrencies. Give me just 1 second. Needed some water. The result of this was a broad-based sell-off across digital assets as investors moved into a more defensive posture, despite equities, of course, like Nasdaq, showing resilience due to strong economic growth. Crypto traders focus primarily on the liquidity implications of today's data and the growing geopolitical risks surrounding Iran, Israel, and the Strait of Hormuz. What to watch moving forward? Right now, the primary driver of risk sentiment still remains the geopolitical backdrop. Any signs that negotiations between the United States and Iran resume could quickly reduce fears surrounding energy markets and improve overall market confidence. Conversely, further military escalations, any threats to major shipping routes, or additional breakdowns in diplomatic talks could continue supporting oil prices, the US dollar, and broader risk off flows. From a macroeconomic perspective, we will continue monitoring inflation expectations, treasury yields, and upcoming Federal Reserve commentary this week scattered throughout the week, alongside this week's labor market data. If strong economic data continues while inflation remains elevated, markets may increasingly price out future rate cuts, creating additional headwinds for crypto and other risk-sensitive assets. For now, markets remain caught between two competing forces: a resilient U.S. economy supporting growth and a geopolitical backdrop that continues to inject uncertainty into global financial markets. Until clarity emerges on either front, volatility is obviously, of course, likely to remain elevated across both traditional and digital asset markets. So that is what we're going to be mindful of moving forward. With that being said, coming over here and starting off with XRP. XRP has been probably one of the most accurate pairs to trade utilizing the dark pools with. As you all can see, one of our latest updates was that if we do not break above the $1.34 region and we see sellers defend at this level, we're likely going to see price back down at $1.27. At time of recording, we have come back down into $1.27 to the absolute pip. We touched it almost point for point. Since then, we have seen some possible profit taking from sellers. I would say right now that as of time of recording, buyers are not fully back in control, even though we are seeing some defense at $1.27. My previous analysis still stands. Anything under $1.27 is likely going to open up the door for a much deeper correction and a buy squeeze that is going to likely turn all of the stop losses underneath of this level into more sell volume, and that's going to open the door for $1.18 as our next area of interest before buyers come in and start defending price. If $1.18 does not hold, $1.11 is next on the cards to the downside. And if these two levels do not hold, then that is going to open the door for a much deeper fall into around 91 cents, or the dark pool hovering at around 91 cents. To the upside, I still remain hopeful as long as $1.27 holds as support. If that is to be the case and we can see price sustainably break back above $1.34, we will be paying very close attention to these EMAs, primarily the 50 EMA on the daily. We need to see price hold $1.27, break back above $1.34, break the EMA on the 50, and see buyers continue to trap sellers after those things unfold, which could open the door for a revisitation of $1.46. If we see that momentum kick back in and optimism shift back into crypto supporting risk assets, a break above $1.46 could lead us up into higher prices. That is a far stretch away from where we currently sit as of time of recording. So for now, we'll stop right there. Upside targets right now on XRP that we need to break above before we get excited are about $1.34 to $1.46. I'm sure we'll have another update before that comes into fruition. To the downside, a break below $1.27 opens the door for these three bearish targets before buyers step back in. XLM. XLM, we've also started to cover in this last video breakdown that got over 122,000 impressions. You guys can see I did not delete any of my drawings on the charts. We had tapped into the 34.3 cent psychological level on XLM's price, or the dark pool that sits at around that area. And I had mentioned to you all that as long as we remain above the 22 to 21 cent threshold, I drew on these two red lines highlighting the 50 EMA. As long as we hold price action above that level, then I remain supportive or bullish on XLM's price that we could continue to target higher sell dark pools. With that last analysis in mind, we come over here to the charts. You can see I did not delete anything. We come up to the weekly. And you can see the highlights on that 50 EMA. As of time of recording, price is still trading above 22 to 21 cents. That previous analysis still stands. Anything above the 50 EMA on XLM, or give or take, roughly around 22 to 21 cents, we're likely to see a continuation move higher, trading back up into the sell dark pools at around 30.43 to 32 as our next bullish hurdles. In a bullish environment, if we can break above the 30 to 32 cent range, then that'll open the door for the next bullish hurdles that we need to see buyers overcome, which comes in at around the 37 to 41 cent sell dark pool. To the downside, if we break the 22 cent to 21 cent threshold and we start to see XLM's price trade beneath the 50 EMA on the weekly, that is going to open the door for a revisitation and a correction of this massive bullish move that took place just a few days ago at the end of May. The first bearish target to the downside is going to be a revisitation of the top side of this consolidation, which comes in at around 17 to 18 cents. If we break beneath that, then we're likely going to see sellers test the strength of the buyers at the dark pool at around 14.23, which is where we had that bullish reaction from a few days before the DTCC announcement via buyers stepping back in and defending at these levels. Underneath the 14.23, the next dark pool to the downside is going to be the 0.872, far stretch away from where we're currently at. So we do have some levels we need to see price trade below before we even anticipate that as a possibility. So for now, to the downside, a break below 22 to 21 cents will open the door for the top of this range at 18 cents. A break beneath that will open the door for a revisitation and a test of the strength of the buyers at 14.23. Beneath that, 0.872. To the upside, a sustainable break and hold above 21 to 22 cents that leads into support holding at 32 to 30 cents will open the door for 37 to 41 cents as our next bullish targets to the upside. Canton has been relatively the same. No crazy updates on Canton's front. We're still trading above both the 13,916 and the 14,801 buy dark pools. So previous analysis still stands. As long as we can hold above those areas of interest, I remain optimistic that Canton's price can continue to trail higher. On the daily time frame, we still have that sell wall that's clearly holding price at about 17 cents that had started defending buyers or defending against buyers all the way back at the beginning of February, where you can see an aggressive seller broke that. Then they turned into a passive seller, and every single time buyers have pushed price up into the 17-cent range on Canton, the passive seller that's sitting here has defended this area. So my thesis still continues, just like on XRP, that last line in the sand is $1.27. This is the last line in the sand for sellers on Canton. If buyers at any point in time can break above 17 cents, we're likely not going to see buy volume stop there. I would go outright and say that a sustainable break above 17 cents is going to turn all of this sell volume into more buy volume, turn into a sell squeeze, and we're likely going to see Canton make an attack or an attempt at testing the strength of sellers at the highs at around 19 to 19.5 cents. If we can sustainably hold above the 18,194 dark pool in a bullish environment, that would open the door for the next bullish target at the sell dark pool at 21 cents. Above that, of course, 24 cents is our next upside, and in an extremely bullish environment, 29 cents above that. I'm personally not buying any Canton above the 15-cent threshold. So if we come down into that 15-cent range, then I'll start to dollar cost average back into Canton. I'm just currently sitting on my hands, comfortable with my bags. But to the downside, of course, our targets still remain to be the 14,801 and the 13,916 as our first hurdles that we need to see sellers engulf before we expect any lower prices. If that does come into fruition and materialize into some formal risk-off event and we break below the 13,916, the first area of interest where I will start to buy a substantiating amount of Canton comes in at the dark pool at the 12,361. Again, far stretch away from where we're currently at. Right now, I hold the bullish narrative on Canton above 13,916 and 14,801. Metal. Metals price action, the last update that we gave, still relatively sound. I mentioned that if we can't break above 16,937, we're likely going to start to see some sellers push price down into the 13,838 to test the strength of buyers that defended here in a previous week. We are still holding that analysis relatively well, trading in no man's land in between two dark pools. So let's see if buyers can start to defend at this base, which is where we're currently trading at now. So in a bullish environment, if we can hold at the 13,838, we can see buyers start to trap sellers and defend. The next bullish hurdle, of course, becomes the 16,937. If we can trade above the 16,937, 18 to 21 cents is next on our radar to the upside. Any break below the 13,838, then we're likely to come back down into the base at around 11.55. So to the downside, a break below the 13,838 is going to open the door for a much deeper correction of this previous bullish move, putting us roughly around the 12 to 11 cent range. If we see sellers engulf the buyers that have clearly defended this dark pool in the past, if we see sellers engulf those buyers, we're likely going to see a buy squeeze beneath these lows, and that's going to open up the door for the 0.795, which is the next dark pool to the downside below 11.55. For now, we'll take this level to level. I'm still optimistic that, again, if we can hold above the 13,838, we're likely to see higher targets come into fruition. So just be mindful, set some alerts, some alarms, and update your dark pools with inside the Discord. XPR. XPR's dark pools have even been extremely accurate. You can see we came up into a dark pool at around the 0.28485, where you can see a passive seller has been trapping late buyers at these highs and defending this dark pool where they had previously become aggressive, breaking below a previous support. You can see buyers made an attempt to absorb sell volume, sellers trapped buyers, became aggressive, broke a previous support, and now we have turned that previous support into a resistance. And that sits at exactly the dark pool at the 0.2002848. So right now, just like on metal, we're trading in between two dark pools. If we continue with the risk-off sentiment, we're likely going to come back down and retest this overall base, which comes in close to the 0.02164 dark pool. In a bullish environment, if we can start to see buyers defend at this base, we could see a possible reversal or a move higher. The first hurdle that we need to overcome is the sell wall that sits at the 0.0028485. If we can see the 0.0028485 overcome, the next dark pull to the upside is going to be at around the 0.037. If at any point in time sentiment worsens and we break beneath the dark pool at the 0.02164, the question will be if buyers can defend at the very bottom of this base. If they cannot and sellers prevail, that is going to open the door for a much deeper correction on XPR, coming in at around the 0.01364 dark pool as our next downside targets below 0.0216. Right now, that is all that I'm currently paying attention to in terms of intraday price action. Across the board, on a day like this where the market's down $50 billion, you know that that meets our threshold requirement for long-term position entries, where, again, our goal is not to guess the bottom or get an accurate position on the bottom. For long-term investors, our goal is just to minimize downside exposure, maximize upside return. So on a day, especially where over the past couple of weeks we saw bullish activity on crypto, a day where the market's down $50 billion plus, those are good dollar cost average days, in my personal opinion, for long-term bag holding. Not financial advice, of course. Sticking to assets right now that I can earn yield on. That's why I've been accumulating XRP, XLM, Metal, XPR, is because all of those assets, every single time that I buy, are going to work on the Metallicus ecosystem, earning me yield. HBAR is another one that I've been earning yield on in the Metallicus ecosystem. I just have not updated and slapped on my deltas and my dark pools onto HBAR, but we could possibly do that in a future video breakdown as well. So those are the levels that I'm being mindful of. Those are all the updated dark pools on those asset pairs. Outside of that, though, that is all that I have for you all. I will keep my ear to the wire in terms of the fundamental backdrop. Tomorrow, real fast before we hop off here, let's just take a quick look at the calendar.